Hello and welcome. I am Chakshu Roy and you're watching Laws in the Making on Rajya Sabha TV. Today on the show, we are discussing the Chit Funds Amendment Bill 2019. To discuss the bill, I have with me Mr. T.S. Sivaramakrishnan, President, All India Association of Chit Funds, and Mr. Mudit Kapoor, Associate Professor, Indian Statistical Institute. Chits are a mechanism through which a group of people come together for a predetermined duration and contribute a sum of money through periodical installments. Under a chit fund, people agree to pay a certain amount from time to time into a fund. Periodically, one of the subscribers is chosen by drawing a chit to receive the amount from the fund. Chit funds have become a mechanism through which people are able to either procure funds or save money. Chit funds are currently regulated by the Chit Funds Act of 1982. However, there have been several concerns with regard to the chit business. The Chit Fund Amendment Bill 2019 has been introduced to remove bottlenecks being faced by the chit fund industry and to enable greater financial access to people.
Several reforms have been suggested in the chit business to address concerns that have been raised by stakeholders. Some of these reforms are to address regulatory burden of the chit business and bring in measures to protect the interest of the subscribers of the chits. A key advisory group was constituted by the central government to review the existing legal, regulatory and institutional framework for chit funds. Further, this group was to suggest suitable legal and regulatory reforms to bring growth in the chit business sector.
इस बिल के आने से जो इम्प्रूवमेंट्स आई हैं उससे और अनरजिस्टर्ड लोग हैं वो रजिस्टर्ड होने की सोच बना सकते हैं. उनको ऐसा लगेगा कि भाई कुछ फ़ायदे हैं रजिस्टर्ड काम करने में. हमारी डिसएम्बिगुएशन जो है जो ख़राब प्रोडक्ट्स के साथ है वो हट रही है और हम अपने आप को फ्रेटर्निटी फंड कह सकते हैं.
Regulatory and legislative reforms in the chit fund business have been recommended by several parliamentary committees who have also reviewed the problem within the sector. These committees, in their respective reports, have highlighted the need to strengthen legislative and administrative proposals for the chit fund sector. These proposals have been introduced in the Chit Funds Amendment Bill 2019.
The client data that we have in lakhs, because we represent almost 35,000 and odd registered chit fund companies all over India. If you look at the data, it's a gold mine we are sitting on. We are unable to use this data other than giving them chits. So it is in the interest of the national economy and the subscribing public to allow us to undertake fee-based activity, which will broaden our base and allow us to enhance our profit. RBI, the only concern for the RBI is that we should not accept any deposit, and the subscribers' money in our hand should not be misused or misappropriated. By allowing us to take fee-based activity, none of these will be affected. So this, I think, is a very serious provision which can be considered.
Under the Chit Funds Act, without state government sanction, no fund could be created. Additionally, no chit fund below the amount of ₹100 is regulated under the Act. The bill brings in certain amendments to the application of the Act. The bill removes the limit of ₹100 and allows the state governments to specify the base amount over which the provisions of the Act will apply.
Mudit, I want to start the program with you and ask you as to, while many of our subscribers have an understanding or a broader understanding of what a chit fund is, what exactly is a chit fund?
So a chit fund is a bottom-up financial instrument which brings together both lenders and borrowers. And it's important to emphasize that it's bottoms up because both it provides lending services as well as saving services to the subscribers of chits. So the way it works is, let's say there are 10 of us who get together to form a group, and each one of us commits to contribute 1,000 rupees every month for the next 10 months. So every month, now that there are 10 members, 10,000 rupees is available on the table, and any one of these members can basically take that money which is available, and nobody outside the member can either contribute to the chits or take this money. Now it might so happen that in a given month, let's say in the first month, there are more than one member that needs this money, whether it is a financial need, emergency need, or maybe there is a marriage in the household, or any other financial emergencies for which a member needs the fund. Now, if there is more than one member that needs the fund, then there is a bidding mechanism that takes place. And that bidding mechanism essentially is that they will take the money but leave certain money on the table. So let's say 10,000 rupees is available. Then one member would say, okay, I leave 1,000 rupees, give me only 9,000 rupees. And this 1,000 rupees is then distributed as dividends among the members. But if the other member says, no, my needs are much more than your needs, I am willing to pick this up, I am willing to leave additional 1,000 rupees on the table. So like that, the bidding process happens, and the person who bids the highest gets those funds. But the chit fund, the way it works in India, has taken advantage of several behavioral economic issues that we now study in academics. They have been putting it in practice for, I don't know, for perhaps decades, if not many more years. And one of the practices they have adopted is that when the bidding exceeds a certain limit, let's say the 30% value of the chit, which is if the bidding is going to exceed more than 3,000 rupees being left on the table, then bidding is stopped and money is allocated to the members who are participating in this round through an allocation, which is through a random allocation, which is a chit is drawn, a chit with their names is put in a box, and randomly one of the chits will be drawn with the name, and that person is allocated the money. Now, the advantage of that is that a person who needs the money, his emergency situation should not be exploited, because this bidding mechanism can continue depending on the need of the financial needs of the person. Now, over here, basically what they are trying to solve is that if a person feels that his financial situation has been exploited, then his incentive to contribute to the commitment that he has made of 1,000 rupees every month would be diluted. So the mechanism, the way it works is that there are some lenders who need the money, who save money, who are willing to give it to some other members who have financial needs for the money. And at the same time, there are borrowers who need the money on an emergency basis immediately. Then that group gets together, and basically the lenders are able to transfer their excess savings to this individual who needs the money. And at the same time, the borrower is passing on dividends to other members in the group.
Perfect,
Yeah.
perfect. Mr. Sivaramakrishnan, one of the things that I wanted to understand from you, and Mudit alluded to it in his own opening remarks, that the concept of chit funds has existed in our country for some time. And do you want to comment as to, how did chit funds actually start in our country?
Sure. The concept of chit fund is prevailing even before the evolution of banking. At least we have records for at least a couple of centuries, more than 200 years, specific reference to Kerala, where almost all temples and churches were operating this. This was earlier on a barter basis, subsequently converted into commercial terms, and in times with this working at par with banking and other financial intermediaries. Almost all banks in Kerala, if you can find out, whether it's South Indian Bank, Catholic Syrian Bank, Federal Bank, they were originally only chit fund companies. Only after the bringing of the Banking Act and the Chit Fund Act preventing chit fund companies to undertake other operations, they converted into a bank. So the concept is prevalent, and this is something indigenous in nature, specific to Indian conditions, and we have been playing a very useful role all along, which cannot be substituted by any other form of financial intermediary.
Okay, Mudit, Mr. Sivaramakrishnan referred to the fact that, possibly the origination of chit funds happened in the southern part of the country. Is there a particular reason as to why certain kinds of savings or lending, mechanisms start in certain parts of the country? Is it a behavioral issue? Is it an issue of how people save? How does that work?
Well, I don't have a very concrete answer, but at least empirical work has shown that savings behavior of the southern states and the northern states in the country are different. Typically, southern states do save a lot more as a percentage of their income compared to the northern states. Now, there can be several historical reasons for it. Maybe southern states were not sort of subjected to the kinds of conquest that the northern states have been subjected to. As a result, they had more stable economic conditions, and therefore their aptitude to save was much higher compared to the northern states, which have been subjected to several conquests in the past. But research on this is not very conclusive, but it's an empirical fact that we observe. We need to research this aspect much more. But having said that, when it comes to chit funds, I think what happened in the southern states were that the erstwhile rulers recognized these financial institutions, these indigenous financial institutions, encouraged it, and also at the same time they were participating in it to finance their expenditure. So as a result, the formal acceptability of the chit fund as an institution was much more in the southern states, because erstwhile rulers recognized the financial instrument to serve not only the financial needs of the population but also the financial needs of the state, which is why I think it's more prevalent in the southern states than in the northern states.
Okay. Mr. Sivaramakrishnan, one of the things that Mudit was talking about was, chit funds come together, and clearly there's a lot of work that is required to bring everybody together and collect payments, regularly from them on a monthly basis or whatever is that time frame. How do chit funds, generate money for the person who's running the chit funds? What is their mechanism? What is their business model for making money from chit funds?
See, the first and foremost thing which I have to emphasize here is it works under the factor of trust. So the chit promoter, whomsoever it may be, unless he has got a social standing and a goodwill, running a chit fund also is impossible. Having said that, the commission that we earn is the payout allowable under the Act. After the formulation of the Act, 5% is the upper limit a chit fund promoter can charge from the chit subscribers.
Okay. So if, for example, in the example that we started with, if the chit amount is 10,000 rupees, right, then the chit fund owner can get 5% on a monthly basis of that chit. That will then help him in running the office, getting people together, ensuring that money is brought into the bank, ensuring that the money is distributed, and ensuring all compliance.
And the risk is also on him. If at all there is a default on the part of the subscriber, the promoter has to bear the risk. Okay. Looking at that, the 5% is very marginal. Even the cost of intermediation, if you look at, see, average we have a chits for 30 months or even 40 months. 50 and 60 were there earlier, but nowadays the average is 40. If you average it out, the 5%, it comes to 1.25% per annum.
Okay.
Providing a financial services with all the risk for 1.25% is impossible in any other segment.
So what you're saying is that the chit fund operator does two functions. One is obviously running the chit fund itself, and the second is to bear the inherent risk that in case one of the subscribers of the chit fund is not able to contribute money for 1 month or another month, the chit does not disintegrate, and the chit fund operator kind of puts in that money into the chit fund, so that the chit fund runs for the required duration of the time. On this note, it's time for us to head into a break. When we come back, we will discuss the provisions being proposed in the bill. Welcome back. On the program today, we are discussing the Chit Funds Amendment Bill 2019. The bill amends the Chit Funds Act to bring in changes to the regulation of the chit business and to protect the interest of the public subscribing to chits.
The bill includes certain other names that are used to refer to chit funds. Also, it substitutes certain terms in relation to chit funds. These amendments have been brought in to avoid any confusion with price chits that are considered illegal under another law. The bill includes fraternity fund and rotating savings and credit institutions, in addition to chit and kuri to be used to refer to chit funds.
2-3 जगह इन्होंने नॉमनक्लेचर चेंज किया है, चिट अमाउंट का, डिविडेंड का. ये नॉमनक्लेचर चेंज करने से जो क्लैरिटी चाहिए थी एक्ट में वो आ गई है. एक और इसमें प्रावधान था सब्सक्राइबर्स की प्रेजेंस का, कि जब ऑक्शन होती है तो सब्सक्राइबर्स प्रेजेंट होने चाहिए. उसे भी ईज़ आउट किया है. उस समय वीडियो कॉन्फ्रेंसिंग के माध्यम से भी अगर सब्सक्राइबर ऑक्शन में पार्टिसिपेट करता है तो वो भी अब मान्य हो गया है. उसकी फिजिकल प्रेजेंस नहीं चाहिए.
The Act specifies the maximum amount of chit funds which may be collected. These limits are 1 lakh rupees for chit funds conducted by individuals and for every individual in a firm or association with less than 4 partners, and 6 lakh rupees for firms with 4 or more partners. These limits have not been revised since 2001. The bill increases these limits to 3 lakh rupees and 18 lakh rupees respectively.
Some mandatory provision to increase the awareness on the chit funds, both at the government level and at the subscriber chit fund companies level. Because what is lacking even as on today is awareness. I am sorry to say, any failure, as I said, whether it's Sarada or I don't want to name any company, is attributed as that of chit funds. So first and foremost is the financial literacy. To bring in that financial literacy, there should be a regular campaign making the chit fund companies and all stakeholders to make the public understand what is chit fund or what is Roska and what is not a chit fund.
The foreman represents a firm or an association of individuals. Under the Act, the foreman is responsible for managing the chit fund. He is entitled to a maximum commission of 5% of the chit amount. The bill seeks to increase the commission of 7%. Further, the bill allows a foreman a right to hold the credit balance from subscribers in order to discourage default by them.
Mr. Sivaramakrishnan, before we went into the break, we were discussing the commission, that chit funds make. And the bill is increasing that limit, I think from 5% it's taken to 7%. And what are your views on that?
Yes, this certainly will encourage more multinational and other people to come and participate in the chit fund activity, and we find this is a very good amendment, in fact.
And what do you think of the provision which empowers the chit fund, foreman to withhold certain amounts in case of, defaults by certain subscribers?
See, in fact, there were 20 and odd sections that industry wanted. We are happy that at least some amendment has come through. Out of the 20 proposals that we made, first on the part of the key advisory group, and subsequently on the interference of the Parliamentary Standing Committee, unfortunately only 7 have come through. These 7 include, number 1, changing the name for this nomenclature to give us a better perception on the public.
To ensure that chit funds are identified correctly as to the business that they conduct.
At least it doesn't get misguided with other Ponzi schemes and other illegal activities, because chit funds basically cannot accept deposits at all. Number 1. Number 2, the enhancement of the limit for the individual and the partnership firm from 3 lakh and 6 lakhs to 6 lakhs and 18 lakhs. That's a very welcome suggestions. And they have requirement of registration. Chits exceeding 100 rupees chit value were mandatorily required to be registered, which is negligible in fact. So moving with the time, they have done the amendment and they have given the liberty to the respective state to fix the limit. It can be either 1 lakh or 2 lakhs, even 5 lakhs. That's a very useful amendment, because it will not be worthwhile for an individual running a 500 rupees or 1000 rupees chit or even 1 lakh rupee chit to get registered and pay the
and bear the compliance burden when the amount of the chit is very less. Can I just bring into one part, so far we've been talking about, chit funds as a source of funds where people, can take a loan if they're part of a chit. But one of the things that chit funds are also useful for as a saving instrument. Yeah. Can you tell us a little bit about that?
So the chit fund, the group provides an opportunity. It's a sort of a disciplining mechanism where members have made a commitment to contribute a certain pre-specified amount of money. So for any savings behavior, one needs a particular commitment. So again, a discovery of a behavioral concept being used, I think, is a novelty of this scheme being put into practice. Secondly, what happens with the commitment is that now, how do I incentivize people to save? I need to give a certain amount of interest rates to individuals, which is what typically the banks do. But what is novel in the chit scheme is that early borrowers leave certain dividends to be collected by people who do not pick up the chit fund money early on in the scheme. So in that way, you could have contributed, for example, to the entire duration. You could have picked up 10,000 rupees till the end, minus the 5% commission of the foreman, while having contributed 7 or 8,000 rupees. So now through this dividend, you will get an interest payment on the contribution that you have made. Now, this is like a recurring savings account, if you wish to think of it, where you are making regular deposits. But again, I want to emphasize that this time the economic survey in 2019 talked about behavioral aspects. The chit companies have already put into practice the behavioral issues because it's a competitive sector, it's an indigenous bottom-up institution surviving on a very meager margin, so it has to compete and it has to evolve to be able to compete and survive. So one of the beauty of this scheme is that while serving the lenders and the savers, its ability to adapt to the environment around itself is what has allowed it to survive for such a long period of time.
Okay. And Mr. Sivaramakrishnan, survival also brings the question of what is the regulatory environment in which chit funds operate? Because clearly, chit funds operate at the state level, but they are regulated by a central act. So if you can lay down for us, what is the different set of regulatory requirements? What is the role of the central government and what is the role of the state government? And any other players, who are associated in the regulation of chit funds in our country?
See, this is another fact which have been affecting our growth. The advisory role, as mentioned in the Act, is for the Reserve Bank of India. The formulation of the Act is entirely with the central government. Though it is in the concurrent list, the entire formulation and drafting of this legislation is central. The implementation and rule making aspect, it is entirely with the respective state government. So practically, whenever there is a hurdle, see, because if you look at it historically, the Act doesn't get drafted or amended unless it an average period is about 18 to 19 years. Whenever we come with a practical solution, coordinating with all the three agencies, whether Reserve Bank of India, central government or state government, it is practically difficult, and to be very honest, we are unable to play our role effectively in the national economy. I think some solution is to be needed in this direction.
Okay. So some solution towards ensuring that the legislative updates that are required to keep the law, in tune with the times happen. One of the things that people also talk about when it comes to chit funds is, that chit funds have, while they have some advantages, and I'd love for you to, comment on that also. There has also been cases where the chit funds have come under, a lot of bad name. People have been cheated out of the money. We have heard of multiple scams that have happened at times. So what is the pro and con of having a chit fund operator, and what's their role, in our sector?
So I think the financial scams that have happened and the bad name the chit fund institution as such has got, very often there's a separation. The media, unfortunately, without paying attention to what actually a chit fund is, very often has clubbed several Ponzi schemes and several financial institutions that have failed as chit funds. Now, once I was in a meeting with RBI officials, and I requested them that how many complaints have you received from chit fund subscribers based on the chit fund sort of the companies that are operating. You will be surprised to know that RBI receives complaints regarding banks, it receives regarding all other financial institutions. When it came to the banking sector with a specific bank, they had received hundreds of complaints. But for the entire chit fund sector, they had received only 2 complaints. So now, my plea is to the regulators as well, is to look at some of these facts. Are the subscribers complaining? If people have been cheated out, that are these legitimate chit funds from which people have been cheated out? And the regulation is so stringent for the chit fund industry that it basically prevents it from failing. In fact, I would say that there are not many chit fund companies that have collapsed. In fact, in the history, I can count 2 or 3 chit fund companies that have sort of collapsed. But they have collapsed where not, I would say, has put a risk to the larger population or the larger members in society at large. They have collapsed either due to rumors, they have collapsed due to some members not being able to meet their financial needs. But at least I don't recall that some of these large chit fund, historically chit fund companies that have been providing these services have actually collapsed. Many of these companies have existed for more than half a century. And when we went and conducted a survey with the subscribers, we found that they had more faith in the chit fund companies than in the regular banking sector when it came to regular saving or getting money from the chit fund. So from that perspective, I think it's not as risky as one imagines it to be.
Okay. Sivaramakrishnan, one of the things that we always, try and cover in the program is what is the impact of a bill that we are discussing on to the people? And in this case, what will be the impact of this bill on the chit fund industry?
See, yes, we are happy that some amendment has come through, because historically, if we look at, as I told you earlier also, it takes at least 19 to 20 years for each amendment to happen. The first ever amendment was Cochin Kuris Act 1932. Depending on the demand and the environment, Madras Chit Fund Act came in place in 61, almost 30 years. Then the Central Act 1982. Then 2001 one amendment came through, now 2019. But even after this gap, we wish the amendment should be, for example, to give you, one of the demand for the industry is to give us the liberty to undertake fee-based activity, because we are unable to serve the customer's need, because we are sitting on a huge data bank. Customers' demand are varied.
To do some additional activities in addition to the chit activities.
There are at least 6 other requirements even in the Act. Unless it comes through, the exercise will not be complete.
Okay, perfect. Mudit, close the program for us with your final comments about what will be the impact of this bill on the subscribers to chit funds.
So firstly, I think this is a big positive step that the government is taking, because very often when it comes to economic growth and progress, devil lies in the details, which is you're focusing on a sector which is larger than the microfinance institution, serving or catering to the needs of the people who are financially excluded from the formal banking sector. So I think this is a very positive step in that direction, and I encourage the government to look at the other amendments that we have proposed.
Mudit, thank you, and Mr. Sivaramakrishnan, thank you for joining us this program. It is now time for us to end the show. You can watch our shows on the RSTV page of YouTube. We will be back with a new issue and a new episode. Keep watching Rajya Sabha TV.